I raised 7 figures of capital, and so far we've scaled to 36 territories without going through the typical venture capital type raise model. So when I was about to raise 7 figures of capital for my own company, there's not really any way to go out and raise it that you can find online for a how-to, unless you're gonna go do a big style venture capital type raise where you're showing hockey stick growth, billion-dollar exits, all of that. And so I had to come up with my own way to raise 7 figures of capital for an artificial turf company that I had acquired and wanted to go franchise. My name is Tim Lovett. I'm the CEO of Waterloo Turf. We franchise as an artificial turf company. I raised 7 figures of capital, and so far we've scaled to 36 territories through the franchise model. And I'm going to tell you a little bit about how I raised capital a little bit over 7 figures and actually had my round oversubscribed without going through the typical venture capital type raise model. So I'm going to start off and actually tell you how I completed my capital raise, and I'll tell you a little bit of a story. This is actually something that I haven't really told many people. So my first step to doing my capital raise was I started promoting the round before I actually even had the deal done. And so Lance and I, who is the original founder of Waterloo Turf, he wanted to go franchise his company. I had a franchise background. We partnered up to go franchise it. About a year ago today, before we actually had the paper in place to do our partnership to go franchise Waterloo Turf, we really only had a glorified handshake. As soon as I had that glorified handshake, I went out to my top 20 investor relationships and went out and started talking about this deal that I had, that I wanted to go franchise Waterloo Turf. I think most people would be scared to go talk about a deal that they didn't even have papered yet. And I think that there are a few good reasons why people would want to wait until they actually had the deal papered and legally had it. You know, I've heard people say, oh, I don't want to go out and talk about it, and then people are going to copy me. I don't want to go out and, you know, maybe somebody takes the deal out from under me because I actually don't even have the rights yet. But for me, what I wanted to do with this was get the feedback out early. And the key for me was when I was talking to my top 20 relationships who I thought could be investors in the deal, I wasn't actually even asking them for money. I was just asking them for advice. And so what I got out of those first 20 relationships that I was talking to as if I already had the deal was they told me all sorts of good feedback on the structure, the team, the story, what our capital plan was, what our projections looked like. I took all of that feedback while in the background I was still closing the deal with Lance officially and put together our story. So the first step that I always like to tell people before they go out and raise money is to promote it early. Don't wait. Get the early feedback, make the tweaks as needed. The last thing you want to do is spend all of these resources from time, legal, money, whatever it might be, and go get a deal that actually isn't even investable for an investor in the first place. Before I officially went out to go ask people to put money into my company, Waterloo Turf, I built the investor funnel. And I want to share with you the exact 8 steps that I had in my investor funnel. Most people, when they're raising money, I think they overcomplicate it. They think about raising money as if it's like this high-level finance conversation, when in reality, all you're doing is selling your deal. This is a sales process. And so I always like to tell people, when raising money, think about your investor funnel the same as a sales funnel. And so here's the 8 steps that I did when I was raising money. So number 1, I created a one-pager, and I went out on Upwork. I hired somebody for $50 and I had them put together a pretty good looking one-pager with this one sentence at the very top: investment opportunity for a turf installation franchisor. I raised 7 figures of capital with a sentence that simple. I get a lot of deals sent to me now, people asking me for feedback or asking me to invest in their deal. And usually the headline is something along the lines of changing the way that the world works and the way people live and all this very meta type of stuff. After looking at it for 2 seconds, I can't figure out what the heck this company is and what the money is going for. And so my goal whenever I'm going out and raising money, and specifically for Waterloo Turf, was to just have a sentence so simple that anybody could understand it. When you send out that white paper, I really think you only have 5 seconds of somebody's time. And so you want to make your message as clear as possible. So after I created the one pager, I then created a 3-minute video. This is probably one of the most difficult things I've ever done, because making a video and packaging your full investment, your full story, the team, all the great stuff that you're going to do, all the complicated strategies that you've put into this, all the financial plans and yada, yada, yada. It takes significantly longer to explain that than a 3-minute video. Every sentence has to pack a punch in a 3-minute video. video. And so I went on my laptop, very similar to this, and recorded a 3-minute video off of my Apple camera of me just talking about the investment opportunity. And I spoke about what the problem was, how we were going to solve it, why the problem needed to be solved now, and how much money I thought that there would be in solving this problem the way that we wanted to solve it. And so step 3, I took that one pager, I took 3-minute video, I packaged it in an email. I just recently looked up the email that I sent out. We had a grand total of 11 sentences in the email describing the investment opportunity, pointing the investors that I was sending to the one pager along with the 3-minute video. From there, I put a calendar link into the email. The calendar link would then send somebody to step number 4. Step number 4 being that they would get time on my calendar. At this time, I would just field some initial questions. I would learn a little bit more about the investor, a little bit more about what they were looking for. And I wanted to see if the investors were values aligned. We had a lot of important parts of our deal. And one of the most important things is that we wanted people who believed in our mission and could actually add value beyond just the money that they were putting out if we ever needed it. Once they came onto my calendar, I would send them a non-disclosure agreement. Once they signed that, they were triggered automatically into the 5th step, which would be sending a data room to them. The data room is extremely important, but again, I think a lot of people overcomplicate the data room, packing everything in there. The goal of a data room is to sell the investor on your investment if they're a qualified and good fit for your investment. And so what I have found is that a lot of people put a lot of unneeded material in the data room. They actually make the diligence on the investors a lot harder. My goal in creating the data room was to make something so simple that it would do all of the due diligence for an investor within a few minutes they would want to do that normally might take them hours and hours and maybe even trips flying across the country to go do their due diligence. So there's a lot more that went into my data room than I could probably talk about, but once that data room was sent over, that came along with another calendar link for an investor to get back on my calendar. From there, I was asking closing questions. What's your check size? What's your timeline to fund? And if an investor was interested, I would get their commitment on the call. Once they gave me their commitment on that phone call, I would then send them an LOI with their check size, closing date, all of the details. They would then sign that LOI, officially getting them and reserving them within our capital round. So those are the 8 steps that I did in my investment funnel. And we ended up doing that and putting 400 investors through that. So some of these investors I knew, some of them I found online and I just reached out to cold. Ultimately, we had 7 people invest into our deal. And so what that means is I got 393 no's on our deal. And for anybody who's gone out and raised money before, you know that a no is not just a polite no that you get when you're raising money. Most investors have made money along the way by their own doing and through their own hard work. And so they have a bunch of opinions. And so they share the opinions with you. And so it's not, no, I don't want to invest in your deal. Usually what you're hearing is, the industry sucks. I don't believe in franchising. Your deal is way too expensive. I can't believe anybody would do this. You should be ashamed of yourself for asking for this much money within the investment or whatever it might be. They're usually giving you a lot of feedback. But in our capital round, I knew that I only needed a couple of yeses. And so every no was one step closer to me getting a yes and filling up the round that we needed. But before I reached out to any investor, the first thing you have to do before you start putting people through that investment funnel is setting the terms of the deal in the structure that you're raising. So let me explain how I did that. The wrong way to set the terms of your investment structure is to make up terms in your mind. And so what I mean by terms is, I'm going to raise X amount of money at this percent of the equity, and it might have this percent of interest rate and this pref or whatever. And it's totally made up in the entrepreneur's mind, and they just go out to market with it. The reality is that the investment market is going to set the terms of your deal at a market rate if you're reaching out to enough investors. The market always determines your price. How I decided to set the terms was I wanted to find a lead investor, somebody who would take a significant portion of our total allocation that we were going out with to raise, and I wanted to negotiate with them to set the terms. So that way, when we went out to go raise capital, I wanted to go out with terms that I could say, somebody has already committed to this money. If you haven't already had somebody buy into your terms, the investors just see it as a negotiation opportunity. And so what's gonna happen when you go out to market, everybody's gonna beat down your terms, beat down, until you finally get somebody to say yes. Then you can go out to the other investors and say, oh, hey, somebody else accepted these terms, but maybe the investor over here didn't want to land here. They thought that they could get the terms way down here, at which point they're disappointed and they back out. It's a much stronger way to go to market, in my opinion, to do it the way that I did it. Set the terms before you actually go out to mass market to 400 investors. Get somebody to say yes to a certain price. Getting a lead investor is the best way to set the terms on your investment round. The last part about my investment round and process was I wanted to do this in a values aligned way. So just a little bit about me and myself. So I'm a strong Christian believer, and so I have a faith background. And so it was important for me to go out and complete this capital round in a way that was values aligned, that I felt like had integrity, but at the same time had the excellence that we were looking for within our company. And so there's a few different things that I thought about that I implemented when I was raising the round. So first and foremost, I put my own skin in the game. My money was just as green as the investor's money, and I put it in at the same terms that everybody else got the same terms on. I didn't give myself any special treatment because I was the founder. I wanted to go out to the investors and say, my terms and deal is so good, and I believe in this so much that I'm putting a meaningful amount of my money in, and it's going to get the same rate of return that your money is getting. Secondly, I gave each investor the same exact terms. One of the things that I've seen in some other investments that I've either played a part of or invested in is some investors get better terms than other investors within the same capital round. And the only reason why they get those better terms is because they ask for better terms. And the entrepreneur is feeling like, oh man, I got to get this deal done. I got to go make this happen. Let's agree to this little side note with him. We'll agree to this little side deal over here. And now I've got a bunch of little side deals. Everybody's got their own deal going on, and everybody's got their own benefits whenever the company goes to liquidate or sell or whatever that might look like. In our round, everybody got the same exact deal. Again, I believe that all money is the same shade of green. And so for no reason should somebody get a different deal on their money than somebody else was getting if they were putting in the same money. Lastly, and I would say this is probably the most important thing about our investment round and something that I spent a lot of time thinking about. We wanted to find investors who had the same time expectations that we did. When I went out to market our round, we had a bunch of interest from different funds, whether it be venture funds, growth funds, private equity funds. The main issue, as I got to know some of these funds a little bit more, they had a 5 to 7 year time horizon. In our industry, the franchising industry, this is not a get rich quick scheme. This is something where we are building real equity value, real brand value, and real royalty streams. But if you look at any great franchisor, it can take them a decade to do that. This is a long-term game that I'm in. And so the last thing I wanted was somebody to come in who was looking for a quick flip, because their expectations of how we should be running this company would be wildly different than anybody who has a multi-decade time horizon like we have. And so for that reason, we ended up looking for investors who have the same values and the same time expectations that we had. This led us to working with high net worth individuals along with family offices. The main thing that helped us out with this is that when you have an individual who doesn't have a quick flip on their money, they're able to work with you over a long period of time. They're more interested in creating actual value versus financial engineering, quick hockey stick growth, just to exit their money and get out at the best time. Who knows what's going to happen after? We only worked with people who wanted to work with us long-term and believed in the long-term vision of both franchising and artificial turf. So hopefully this is helpful. Again, this is how I raised my round. First you go out, you promote early, then you build the investor funnel, then set the terms, but do it in a values aligned way. So hopefully this will help you with your round if you're thinking about raising money. And if you like this kind of content, we try to post every single week with a little bit about what I've done and what we're doing within Waterloo Turf. Go ahead and like and subscribe if you like this kind of content.